Can AI replace corporate bankers? The truth about human discretion in big loans. Can AI replace corporate bankers? Or is human discretion necessary? Why 5,000 crore rupee loans can't be fully automated? Algorithm vs banker. Who should approve corporate loans? Remove human discretion. The hidden risk in corporate lending. Can AI stop bank loan scams in India? Corporate loans, AI solution or human problem? Retail loans are algorithm driven. Miss 1 ME, system reacts instantly. So why a 5,000 rupees Crore corporate loan still approved by human committees? Why is corporate lending relationship based instead of fully automated? In this investigative episode, we break down why retail lending can be automated, why corporate lending is project based, the risks of human discretion, the corruption argument, whether AI can reduce fraud, the real reason corporate loans cannot be fully algorithm driven. We also examine risk modeling differences, strategic vs statistical risk, role of regulatory oversight, how accountability can reduce corruption. Is the solution removing humans from banking or strengthening systems around them? Watch till the end to understand the structural truth behind India's corporate lending model. Subscribe for the next episode in the banking reform series. What if I told you that every 5,000 crore rupee loan was approved not by humans, but by an algorithm? No meetings, no phone calls, no political pressure, no relationship banking, just data. Would corruption disappear? Or would the economy collapse? Let's investigate. Chapter 1. The anger people say, retail loans are algorithm based. Miss 1 ME, system reacts instantly. So why can't corporate loans work the same way? Why allow human committees? Discretion negotiation relationship based lending. Because where humans enter, corruption can enter. This anger is understandable. But now let's go deeper. Chapter 2. Why retail is easy to automate. Retail loans are based on salary slips, credit history, ME ratios, past repayment behavior. There are millions of similar borrowers. Algorithms detect patterns. Risk is statistical. If 1% default, bank survives. Retail lending equals math problem. Chapter 3. Why corporate is different. Corporate lending is not pattern based. It is project based. A 10,000 crore rupee airport project depends on government policy, fuel prices, passenger growth, global economy, regulatory clearance, litigation risk. Tell me, which algorithm can perfectly predict future demand in 15 years? Political stability, environmental activism delays, industry collapse like telecom or steel downturn? These are strategic risks, not statistical risks. Chapter 4. Where human discretion becomes dangerous. Human discretion is needed. But when there is political influence, inflated valuations, weak due diligence, internal collusion, the same discretion becomes dangerous. That's where major frauds began. The problem is not discretion. The problem is unaccountable discretion. Chapter 5. Can AI help? Yes, I can. Detect abnormal cash flow projections, flag unusual collateral inflation, compare industry ratios, track promoter risk history, identify loan evergreening patterns. After the NPA crisis, regulatory tightening by Reserve Bank of India pushed banks toward data monitoring and centralized risk systems. But AI can assist. It cannot replace judgment completely. Chapter 6. The risk of full automation. Imagine, algorithm says, high risk. Loan rejected. But project was a strategic infrastructure project. Jobs lost. Growth slowed. Competitor country advances. Banking is not only profit calculation. It is economic decision making. Corporate lending affects GDP. Retail lending affects ME. Different scale. Chapter 7. The real reform model. Not human only. Not AI only. But hybrid system. Where AI flags risks. Independent committees review. Sanction meetings recorded. Personal accountability fixed. Criminal liability enforced in fraud. Discretion with accountability. That is the solution. Removing humans won't remove corruption. But removing accountability guarantees it. The future of corporate lending is not algorithm vs banker. It is algorithm plus accountable banker. Because banking runs on trust. And trust cannot be automated.